What is going on YouTube? It's Sank here. We are back with another one. Now in this drop, coming at you guys with a couple of plays I picked up in the markets today. But before I kick things off, I'd like to help out the channel by hitting that like button because it keeps the show rolling. So that wraps up another day in these markets. Now today we saw the S&P, the Dow and the Nasdaq all finish up down today. Now to the untrained eye, might seem like a bad day out there in the markets, but I'm here to tell you guys that is not the case. What we're seeing is a theme that I brought to your attention over the last couple of days, and that is the S&P and the Dow finishing up more in the red than the Nasdaq. That's exactly what we want to see, because over the last couple of weeks we've been seeing the S&P, the Dow continue to break through all-time highs, looking very overextended, putting them in crash correction territory. And as they were, if that were to happen, it would feed across the entire market and into those growth plays. So it's good to see them have a cool off. And what's also helping that cool off is the fact that these companies are posting up solid earnings. Yesterday was Walmart, today was Lowe's. So as I say, it's good to see these markets cool off, and going forward, I'm hoping that it continues to do the same. Now in this drop, coming at you with a couple of plays I picked up in the markets today, help you guys where to distribute your dry powder and continue to build up quality portfolios. But before we get to the first play, I want to pay homage to one of our particular channel plays. Alright, so check this out. On the day where probably over 95% of the market was down, we have Highcar up over 17% on the day, hitting over $17, making this an all-time high for the play, basically just running rings around the market. That's why I say to you guys, there's no such thing as a boring day in these markets. And this is a play that I've been putting on your radar, saying this is a play that will double up. As you can see, they've been making their move. That's why I say to you guys, when you're investing into quality, you guys have got nothing to worry about. Now, when you start to see these plays make a move, it's time to start readjusting your stop limits. So whether you have that just below support or just above your average, or 10 to 15% below the current price, it's good practice to get used to applying your stop limits with these more volatile types of plays. Now this is a play that's not yet reached its peak. We know they're in growth mode right now, but there's two things to take into consideration. The first is a pullback on that price after they've just hit their all-time high, and the second is a potential stock offering if management want to make the most of that higher stock price. Now we're just adding Highcar to our collection of growth plays that broke through that all-time high, alongside plays like BCRX and Lovesac as well. Now it's no coincidence that these types of plays aren't ones that are heavily covered on YouTube or Reddit or on the internet. Now those that have that high coverage are plays that have been annihilated. So it's something for you guys to consider as you move forward with your investing journey, not to overlook those under radar plays. Speaking of which, the first play I want to put on your radar that I picked up in the markets is one of those under radar plays. So let's run the first one. So we've got ticker symbol CZR, that's Caesars Entertainment. This is a play often overshadowed by DraftKings or Penn National. Doesn't get nearly enough as publicity as those plays do, and as it deserves. Now stock price performance, last 3 months, this one's up over 15%, so coming in stronger than those two plays. This is one that still has that business momentum, makes quality partnerships just like DraftKings do with the NFL, for example, but also the valuation comes more cheaper than those two plays. That's why this one's performed better over the last 3 months. Now I like this one under $100. Every time I catch this one under 100, add a little bit more to my position. So I couldn't resist adding some more today, because this is a play I'm expecting to round up the year around the $120 mark. Several catalysts such as increasing states coming online, so that increases the revenue potential of the play, and this is going to be a beneficiary of economic reopening. So this is the first one I want to drop on your radar. The next one I had to pick up in the markets today was Grow Generation, ticker symbol GRWG, coming in at $38. Now standing at 125 shares in this one. I'm looking to get this one closer to 200 shares by the end of Q3. Have my position fully built out in this one, ready for the run up in that price. This is one where the business momentum is strong. Not only that, the management, they're focused, ambitious to take this one from strength to strength. Now I'm loving the fact that this play used to be over $60, because I know if management can continue to move this one forward, that's an easy price target on this play. Now I'm looking to secure the bag on this one, hit the double up, knock this one out of the park this time next year in this one. So this is another play to put on your radar if you haven't done so already. Now with this play, I'm nibbling at this one until I hit those 200 shares, because although right now they're sitting at that support at around that $38, $39 mark, if the market is to continually be turbulent, you could see this one drop down to their next support, which would either come in the mid 30s or the low 30s. around that $31, $32 mark. So it's all about making strategic and timely entries with these plays. The next one I've got for that's ticker symbol AAPL. That's none other than Apple. Now it's time for me to revisit this play, because the way you guys should be building out your portfolios is as your portfolio size increases, your cornerstone investment should be increasing in line. Because it's very easy to start off with a cornerstone investment like an Apple taking up about 10% of your portfolio. Then because you're out there buying all these growth plays, that 10% drops down to 5% or even lower. So I had to increase some Apple in my portfolio as my portfolio size increases. Now Apple's a player I've been rocking with for a while now. Got an average of $92 on this one. As you can see, my gain is, ignoring FX, is over 1,200. So that's why I say it pays to be invested into these plays. And we know Apple's on the low right now, so that 1,200 should really be closer to 2,000 once Apple gets moving. So that's why with plays like Grow Generation, I've only had for 6 months. I have no problem holding them where they're at right now, because I know over the next 6 months, that's when they're going to come into their own and start generating those returns. So as I say, it pays to be invested into these plays. The next one I picked up, that's ticker symbol SLM. Now the way to win in these markets is not just with your growth plays, you can also knock it out of the park with different types of plays like your financials, like we've been doing with Wells Fargo, like we're going to continue to do with this play. Now I like this one under $20, so another play I couldn't resist picking up in the markets today. Now this is the type of play that's going to benefit in economic reopening, but also benefit from an inflation environment as well. So it's a good one to add to the portfolio if you're looking to add quality and continue diversifying. Now, when it comes to picking up plays in the markets, you guys are going to be focusing on those plays that have announced their earnings, and their earnings have come in strong. And that's a theme with all the plays I've put on your radar today, whether that's Caesars, Apple, or SLM Corporation, or Grow Generation as well. All of them have come out strong, knocked earnings out of the park. So it's a given going forward, if they continue the momentum, these prices are set to increase. So if you've been rocking with the channel, you know what time is. Question comes from Philip, says, if you want to build a more safe dividend portfolio, is it possible to select stocks so you'll be paid a dividend each month, or do they all pay out at the same time of year? So to round things up, I want to share this one with you guys, but before I get to it, I want to say this to you. During times of market panic, what tends to happen is, particularly to newer investors, is they'll try and run to the next thing that's in fashion. So you guys are seeing a lot of people move from stocks over to crypto, but you guys know just today and over the last couple of days, you guys have seen how volatile crypto can be. And a lot of people put a lot of people in the red in their crypto investments. So that's why we say staying the course is important when it comes to investing, because things will come full circle. A lot of these growth plays that are down right now, like a Grow Generation, for example, has a lot of room to climb, 30, 40, 50% and more in the tank on a play like that, and various other quality plays that I can list out for you guys. So it's important you stay the course. That's how you make the money and the returns in these markets. When others are fearful, you guys continue to buy into those quality plays. That is the nature of investing. But when it comes to dividend investing, something I've spoken to you guys about before, and you guys got to know with dividends, they pay out different times a year. So I'm going to give you guys a schedule. I'm going to drop it down in the comment section each month, how you can get paid out from different companies that pay a decent dividend. But with dividend investing, something you got to know is you need a lot of capital to actually get a decent reward from these dividend payouts. I'm talking several hundreds of thousands, ideally, if you want substantial dividend payments. If your portfolio has a couple of $100s in it or a few $1,000s, your dividend payment is going to be very small. So it's just something for you guys to consider when it comes to stock market investing and making the best returns. It's typically at those beaten down growth plays. That is where the large majority of the money could be made. But as I say, I'm going to drop down a dividend schedule for you guys that allows you to be paid out each month. So that wraps up for this one. If you guys got any questions or comments for me, do leave them down below. And if you're new, join the movement by hitting that subscribe. I want to say I appreciate you guys, and I catch you in the next one.